Hey guys, welcome back to another episode. Today I want to take a closer look at two semiconductor companies that are really focusing or kind of benefiting with AI at the moment and kind of put them against each other. The two companies we're going to take a closer look at today is going to be one of my favorites, AMD, and Super Micro, a fan favorite at the moment. So in today's episode, we're going to take a closer look at things like Business 101, their balance sheet, their margins, shareholder returns, growth opportunities, and risk, and at the end, overall valuation. So let's take a closer look in today's episode. So first, I just want to take a closer look at kind of price returns of what we're seeing right now. Super Micro is sitting at $285. Year to date, the stock has done amazing, 239%, right? This is the NVIDIA of value investors to some extent, because if you were kind of following Super Micro earlier on this year, this was trading at a crazy low valuation. Now, if we take a closer look at AMD, right now the stock is sitting at roughly $105. Kind of a red day in the market right now. We can see year to date AMD is trading up at 64% year to date, which is not the kind of returns that Supermicro has returned, but overall those are some amazing returns compared to the overall market and compared to the semiconductor space as well. So like I mentioned, first I want to take a closer look at their Business 101, right? Maybe some people might not be familiar with either one or with one of these companies. So let's start off with Supermicro, and this is from their overall 10K report.
Finally, I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So if we take a closer look at the 10K report for Supermicro, they mentioned that they are a provider of accelerated compute platforms that are application optimized high performance and high efficiency server and storage systems for a variety of markets, including enterprise and data. They do mention that they offer a high degree of flexibility and customization for their server models, so the customer can kind of pick the best that works for them. So here's just a quick image of some of the solutions that Supermicro has. For example, if you're kind of creating a large-scale AI training place, maybe you need an extra large kind of huge data center, you can use these liquid cool AI rack solutions. Maybe something large, you're using this 8 GPU system. Maybe something medium, you're using a 4 GPU system. Or if you're looking for some storage solutions. Another kind of example is here is, hey, if you're trying to kind of create some form of maybe small data center, small server for omniverse workloads or visualization workloads, these are some of the solutions that they provide. So right off the bat, we can see that, hey, look, they manufacture servers, and one of the important things is they kind of do it in a way where it's very customizable, and they also try to be first in the market with whatever they provide. Now, if we take a closer look at AMD, they mentioned that they are a global semiconductor company, primarily offering numerous solutions: CPUs, GPUs, DPUs, FPGAs, and system on chips. Outside of that, right, this is, most of you probably heard of AMD before. They design their own chips. Those chips get manufactured in some other company, and those chips are used in a variety of markets like the data center, the client space, the gaming space, and the embedded space. So I do believe now we have a nice understanding of how these semiconductor companies kind of provide a solution to their customers. So first, I want to take a closer look at the balance sheet. And first, right off the bat, we do see that both these companies have some total long-term debt. AMD has a lot more debt, but if we take a closer look at valuations, market cap of AMD is roughly 169 billion, where market cap of Supermicro is roughly 15 billion, right? So AMD is about 10x bigger than Supermicro at the moment. And I do believe if we take a closer look, their debt is actually 10x bigger as well. So it kind of correlates with the kind of market cap. Advanced has roughly $2.5 billion in total debt. Supermicro has roughly 290 million in total debt. Now, if we look at kind of cash from operations, luckily both companies are profitable, are positive in cash flow from operations in the trailing 12 months. Supermicro has roughly 663 million. Advanced Micro Devices, AMD, has roughly 2.4 billion. So in theory, both companies have almost a Supermicro definitely has a lot more cash from operations than its long-term debt. AMD definitely has kind of enough cash flow at the moment to kind of be able to pay off almost all its debt. But if that wasn't the case, AMD AMD and Supermicro do have a nice amount of cash and short-term investments. AMD has roughly $6.3 billion in cash. Supermicro has roughly $440 million. So in theory, without even looking at their positive cash flow from operations, both companies can pay off their total debt and still have some cash left over on their end. AMD, in my opinion, definitely has a bigger kind of cash and short-term investments, but overall, both companies in forms of balance sheets are looking okay. So just quick thoughts. Both companies have some long-term debt like we saw. At the same time, both companies have enough cash and cash flow from operations to cover that long-term debt. So in regards to balance sheets, both companies look okay in my eyes. Let me know what you guys think about their balance sheets on the comments below. Now, I do want to take a closer look at some other things, but first, I do want to say thank you guys for the support. We just hit 28.3 thousand subs in this channel. If you haven't, make sure to hit the thumbs up, the subscribe button. If you want to get exclusive videos to the Semiconductor membership program, just click join to learn more. Weekly videos, deep dives. We're going to take a closer look at earnings later on. Special offer at fool.com/Jose. Free newsletter at josenajarro.substack.com, and free semiconductor news at semiconductorwatch.com. All right, so next I want to take a closer look at margins. So margins is definitely a different play. We do see that, hey, Supermicro is a developer of servers. So they just kind of buy products from all other markets. And a business like that will tend to have lower margins. And we can see here, Supermicro's gross profit margins are roughly 17%. AMD's gross profit margins, because they are designing kind of entry to their market, I want to say is a little bit harder, a little bit more expensive. Their gross profit margins show that. They also do have a little bit of software solutions as well. And their overall gross margins are 45.6% in the kind of recent quarter. So overall, we do see that AMD does lead in margins. Now, if we take a closer look at profit margins, right now, we are kind of in an interesting cycle in the semiconductor space. Supermicro has an amazing profit margin right now of roughly 8.86. When we take a closer look at quarterly numbers, those are one of the highest we've seen in a while. Advanced Micro Devices is roughly sitting at quarterly profit margins of 0.5%. Those are probably one of the lowest numbers we've seen in the past 3 years. So like we take a closer look, just some quick thoughts. Gross profits, we did see that designing chips is clearly a better business when looking at margins when compared to server building. When we take a closer look at profit margins, it is important to know that AMD is kind of at its 3-year low, but remember, we are in a cyclical market where right now the consumer business is doing really, really bad. So when that turns around, and I do believe it should, thanks to kind of macroeconomics eventually turning around, AMD's profits should go up to higher values like we've seen in the past, maybe closer to 20%. Now, what's Supermicro, right? They're nearly at a 3-year high right now due to the huge demand for AI servers. And I do believe this could be one of the risks in the future. Hey, what if the AI demand kind of slows down? Then Supermicro, maybe those margins can start to kind of dwindle a little bit more. Also, another thing to understand or to keep in mind now is competition in the server space is a little bit harder, or there's more competition in this space. So obviously that can put some pricing pressure in the future. AMD definitely has pricing pressure as well with its competition of Intel, who is such a huge player. Now I want to take a closer look at shareholder returns. I want to say both companies don't really do much of a dividend. None of them actually pay a dividend. AMD has been buying back a nice amount of shares. We can see in the trailing 12 months, they bought roughly 1.5 billion shares. Supermicro has bought roughly 130 million. Again, none of them pay any dividend. While AMD does kind of do a little bit more buybacks, it is kind of important to understand that AMD has diluted their shares a lot more in the past 5 years or so. Since 2019, AMD has increased their outstanding shares by roughly 50%. Most of it is actually coming from an acquisition that it did of Xilinx. If not, we do believe it will probably be in similar ranks of Supermicro, which would be in the low to mid-teens. Supermicro right now, shares outstanding since 2019 have grown only 11.18%. Again, like I mentioned, most of that dilution for AMD was thanks to an acquisition that the company did. But overall, we do see that right now, both companies don't really do much of a return in shareholders only in forms of buybacks, but Supermicro hasn't done it in a while, and AMD is only doing it to kind of offset the huge amount of dilution that they've seen in the past. Now, if we take a closer look at growth opportunities, so growth opportunities for AMD, first, I do believe we should kind of take a closer look at analyst expectations. So both AMD and Supermicro are expected to grow a nice amount in the current fiscal year, in next fiscal year, and 2 fiscal years ahead. So both companies are definitely expected to see nice growth. If we take a closer look at what's kind of driving that growth, let's start off with Supermicro. With Supermicro is obviously the AI market. They have numerous opportunities here in the AI space. In some of their most recent earnings, they did mention that, hey, look, they're seeing strong tractions in all of their AI products. Obviously, right now driven by NVIDIA's AI products, but overall they're also getting good traction from Intel and AMD's AI solutions as well. So I do believe that's one good thing about Supermicro, that hey, it doesn't matter if NVIDIA remains the king, if AMD remains the king, or if Intel becomes the next king of AI, Supermicro will be able to do well with whoever wins in this race, as long as there is a AI demand. They do mention that, hey, look, 52% of their quarter 4 revenues was AI and GPU market. Now, AMD's growth opportunity is also in the AI space. They have kind of GPUs that go against NVIDIA's, and there is a huge market there. They have huge amount of CPUs, and obviously the amount of consumer products that once the consumer market returns, they will be able to benefit from that space. They still have such a low market share compared to Intel, that this can overall help them grow their opportunity in the data center market as they continue to take market share from Intel in the server CPU. Now, some of the risks, obviously, for Supermicro, like I mentioned, one is, hey, right now they are seeing this huge AI demand, and that's kind of helping kind of push average selling prices. But if things start to turn around and there is a lot of competition, those margins, those pricing powers can kind of go down. With AMD, obviously, there is also competition in this space, and obviously Intel is a big player at the moment right now. So the final thing I want to take a closer look at is valuations. If we take a closer look at AMD's current PE ratio is non-existent because of the overall cyclicality in the market. Supermicro is sitting at a current PE ratio of 25.62, which doesn't seem that crazy. Now, if we take a closer look at PE ratio forward, which is the end of this fiscal year, so two quarters for AMD and 4 quarters for Supermicro. If I'm thinking correctly, AMD's PE ratio is 38, Supermicro's is 17. So AMD is definitely kind of pulling back down, and Supermicro is still sitting at those very strong low valuation numbers. Now, forward 1 year, so this is not this fiscal year, but next fiscal year, AMD's PE ratio is 25.4, Supermicro is roughly 14.45. So we do see that Supermicro trades at a lower valuation when compared to AMD, but I do believe it's because the market understands the difference in growth opportunities, right? So if I had to choose one right now, I do believe I would have to choose with the one that's in my portfolio at the moment, and that is AMD stock. And the reason for AMD is I do believe AMD is one of those that, while Supermicro has that great opportunity that it doesn't matter who wins in the AI race, Supermicro can definitely win. I am a little bit worried about maybe some of the competition in the server business, even though Supermicro right now is able to really kind of enter into the market before all its other competitors, and they do have great kind of partnership with AMD, with NVIDIA and Intel. I still believe there's a form of cap to that space that Supermicro is in, where I don't believe AMD has much of a cap at the moment, as they can grow into other markets, also with their FPGA solutions, also with their AI solutions in the PC market. And in forms of forward valuation, we did see that, hey, AMD's PE ratio forward 1 year sitting at 25.4. This doesn't mean I'm bearish on Supermicro. I do believe How can I say this, right? If I had Supermicro in my portfolio, it wouldn't be the worst thing, right? I don't believe it would be the worst thing. I wouldn't sell it right away, but I personally do enjoy the growth opportunities of AMD a little bit more, even if I'm paying a little bit more of a valuation. I do believe Supermicro is very dependent on kind of everybody's supply chain, and that can definitely hinder the company one way or another. So let me know what you guys think. Take care, have a good day, and see you next time.